Today's class will continue with the assessment of companies' problems. In the previous class, two problems have been solved. So next, we will continue with the third problem. This is the question paper problem related to 2018 year. So we'll see the problem now. Following is the P&L account of Sandesh and Company Limited for the previous year, 18-19. So as usual, debit items and credit items have been given one by one. I will notify that. Establishment expenses. So it is related to completely business and hence not to be taken. Rent and taxes, as the name says, taxes, which is related to business and hence it is not considered. Depreciation, I'll compare with the adjustment, that is additional information. If there is any depreciation, I'll compare with this, and if there is any excess, I'll add it as an inadmissible or a disallowed expenses. If it is deficit, I'll make it as a admissible income, so I'll deduct it from that. Okay, let's see later about that. Fire insurance is always, this fire is made on the stock or whatever it is which is related to business, and hence fire insurance is completely a business expenses, not to be taken. Provision for tax, whatever the provision is there, need to be considered. Entertainment expenses, not necessary, it is treated as entertainment expenses given to the employees. And then donation to Rajiv Gandhi Foundation, any donation, it is a personal expenses and hence it is to be considered. And this particular donation is related to Rajiv Gandhi Foundation, this comes under 50% deduction, and hence Rajiv Gandhi Foundation under section, that is after gross total income, while we deduct the donation, we will deduct only 50%. General expenses, proposed dividend, any dividend, proposed dividend, it is to be considered. General expenses, we will see it in the additional information. Then next, net profit. Come to the credit side, gross profit, we need not worry about this. Rent received, so we have to analyze to which head of income this belongs to. Rent received is related to house property and hence we have to concentrate on this rent. If it is, the problem is related to income from HP, if they have directly given as income from HP, we can take directly, as it is not an income, it is only a rent. So this will be gross annual value, from that we have to calculate the standard deduction and then we have to arrive at the income from HP, that we will do it in the total income later on. Profit on sale of fixed asset, to which head this belongs to? Capital gains. Interest on government securities, again other sources it belongs to. Then dividend from Indian company belongs to other sources. Next, additional information. General expenses include a sum of 9,600 for municipal tax and 1,600 for insurance on HP let out. So it is clearly stated that these general expenses are spent for municipal tax and insurance payment made on house property let out. House property, it is a completely related to personal items and hence 9,600 municipal tax and 1,600 insurance related to house property is completely be considered, to be considered here, that is which is general expenses elide nodi. So we general expenses, instead of writing this amount, we will consider municipal tax and fire insurance premium related to house property. So add municipal tax and insurance on HP. Next, depreciation allowable as per IT Act is 50,000. So debit balance given in the depreciation P&L account is 60,000 minus 50,000. I will get the positive answer, and hence excess depreciation ಅಂತ ಕನ್ಸಿಡರ್ ಮಾಡಿ ಅದನ್ನು ನಾವು ಡಿಸಲೋಡ್ ಎಕ್ಸ್ಪೆನ್ಸಸ್ ಅಲ್ಲಿ ನಾವು ಅದನ್ನು ಕನ್ಸಿಡರ್ ಮಾಡಬಹುದು. ಆರ್ ಇಟ್ ಕ್ಯಾನ್ ಆಲ್ಸೋ ಬಿ ಟ್ರೀಟೆಡ್ ಆಸ್ excess depreciation, and hence the difference is to be taken to the disallowed expenses or inadmissible expenses. So let's start with the solving the problem. First step will be the computation of the income from business. So net profit 5,90,100. Among that, the debit balances which I said now, I will take all those items. Excess depreciation, the difference between the P&L account and the adjustment amount 10,000. Any provision is to be considered. Donation to Rajiv Gandhi, here no need to consider the 50% or 100%, no need to worry about that. Completely take the given amount. Proposed dividend, municipal tax, this is related to general expenses. Municipal tax on HP I have taken, insurance on HP I have taken. So total of all this will come to 3,51,700. After adding up, 9,41,800 will be the answer. After that, we'll consider the credit items. Rent received 80,000, profit on sale of fixed assets, and interest on government securities 24,000, dividend 20,000. So after all these adjustments, I will get the answer as income from business 7,80,800. So after calculating the taxable income from business, the second step is computation of total income, right? So under that, we will be having five heads. So take first head as income from salary. There is no information regarding the income from salary. Take it as a nil. Then the second heads of income will be income from HP. As I said earlier, they have not given directly this income from HP amount. They have only given rent received. Whenever the rent is received, we have to consider that as a GAV, gross annual value, 89,000 rent received. From that, any municipal taxes paid on house property is to be deducted as it is given in the P&L account, which is included in the general expenses ಅಂತ ಕೊಟ್ಟಿದ್ದಾರಲ್ಲ adjustment additional information ಅಲ್ಲಿ. So adana municipal tax paid na we have to deduct it. After deducting that, I will get the NAV, that is net annual value. From that, standard deduction is to be given 30% of NAV, 21,120. So total income from HP now is 49,280. So third income is income from business, which we calculated right now, 7,80,800. Income from capital gain, under that we have the item related to profit on sale of fixed assets. Any assets which will be sold will come under say capital gains, and hence I will consider this amount, 37,000. Income from house, other sources, interest on government securities has been given. Dividend from Indian company, as it is an Indian company, it will be completely exempted, and hence it is exempted. So total of all these items will be arrived at gross total income. So in this stage, deduction under section 80G, donation will come under 80G. So this Rajiv Gandhi Foundation, Jawaharlal Nehru, and Indira Gandhi Memorial Trust, all these, and the other one is Prime Minister Draft Relief Fund. So these four items will come under 50% deduction. Those 50% deductions, I have said it in the first class regarding the deductions of 100% and 50%. So apart from those items, the other donations will come under completely 100%. So ಯಾವ್ಯಾವುದು 50% ಇದೆ ಅದನ್ನು ಮಾತ್ರ ನೆನ್ಪಿಟ್ಕೊಂಡ್ರೆ ಸಾಕು, 100% ಡೊನೇಷನ್ ನಮಗೆ ಡೈರೆಕ್ಟಾಗಿ ಕ್ಯಾಲ್ಕುಲೇಟ್ ಮಾಡ್ಕೋಬೋದು. So Rajiv Gandhi Foundation has been given, right, and hence it will come under 50% deduction as per the Income Tax Act, and hence among 10,000 only 50% is to be calculated. So I will be arriving at the total income of 8,86,080. And here they have asked us to compute only the total income of the company, and hence I have not calculated the tax liability here. So here ends up our problem. So next we will move on to the next problem. Next question paper problem ido 2016 though. So compute the taxable income of Vijay Lakshmi Limited for the previous year 17-18. So let's consider the debit balances first. Two salaries, no need to worry. Bonus, not to worry. Postage, no. Depreciation, as per I explained it now in the previous problem, take it the difference. If there is any excess, add it. Any deficit, deduct it. Income tax, yes, completely it is to be considered as an inadmissible expenses. Provision, any provision must be considered. General expenses, as of now, no need. So after considering the additional information, we will let you know. Next, net profit has been given. Come to the credit side. Interest, obviously interest will be coming under the income from other sources. It might be interest on fixed deposits, it might be interest on government security or any other securities, whatever it is, but interest will come under income from other sources. And STCG they have come directly given as long short term capital gain, which will come under the head capital gain. Come to the additional information. Amount of depreciation as per IT Act is 15,000. See, depreciation given in the P&L account is 25,000. Here it is 15,000. Take the difference. 10,000 is excess, and hence I will add it. Amount of interest is from government securities. Yes, Here it was a question mark, to which interest this relates to. As I said that this interest is from government securities. So it is clear that it will be coming under the head income from other sources only. Next is general expenses include 5,000 for advertising. Advertisement is expenditure which come under the business related items, and hence I need not to consider this advertising expenses. Next, 2,000 for charitable donation. Yes, any donation is a personal item, and hence I will consider this 2,000. 3,000 paid for exchanging old car for new one. Okay, 3,000 is paid for the buying the car in exchange value. So car is an capital asset. Any capital expenditures is to be considered, and hence 3,000 will be considered here. Next, 5,000 is for miscellaneous repairs. Miscellaneous, the word miscellaneous will come only under the business related activity, not related to personal. So hence miscellaneous repairs not to be considered here. Let's solve the problem. Net profit 1 lakh. Excess depreciation, as I said earlier, take the difference. If there is any positive amount, I will consider it as an excess depreciation and will be applicable under the head inadmissible expenses. Therefore 25,000 given in the P&L account, 15,000 given in the additional information. When compared to this, 10,000 is excess. Then income tax, provision for income tax, any provision or reserves will be considered, and hence 2 lakh is considered here. Donation 2,000. Car, as I said earlier, it is a capital asset, and any capital related expenditures will be considered here, and hence 3,000 is considered. So I hope you understand, right? Car is a capital asset. Any capital asset purchased will be related to business, but still any capital expenditures made on huge assets will be always to be considered here, and hence capital expenses I have been considered here. So total of all these will arrive at 3,65,000 minus admissible incomes interest. This interest has been said that interest from government securities, and hence it is considered 10,000. STCG have been given 15,000. So 25,000 deducted, 3,40,000 is the income from business. Here next step will be computation of total income. So computation of total income, 5 heads of income is to be considered. One is income from salary, nil. House property, there is nothing information related to house property, and hence nil. Business or profession, that is income from business or income from company, which we have calculated right now, 3,40,000. Capital gain, directly they have given as short term, and hence 15,000. Other sources, interest from government securities, 10,000 is given. So total of all these will, gross total income will come to rupees 3,65,000, and then deduction under section 80G, donation will come under 80G. Therefore donation given to charitable donation, it is not, wherever it is not said that charitable, approved charitable or recognized charitable institution ಅಂತ ಎಲ್ಲೂ ಕೂಡ ಅಲ್ಲಿ ಸ್ಪೆಸಿಫೈ ಮಾಡಿಲ್ಲ, and hence we cannot consider that as a assumption. Therefore as it is not completely said, we can take it as a 100% deduction. So I have taken 100%, 2,000 deducted. So total income will be arrived at 3,63,000. So in the problem they have said us to calculate the tax liability, taxable income ಕೇಳಿದ್ರು. ಸೊ ಇಲ್ಲಿಗೆ ಟ್ಯಾಕ್ಸಬಲ್ ಇನ್ಕಮ್ ನಿಲ್ ಆಗುತ್ತೆ, ಬಟ್ ಸ್ಟಿಲ್ there is one more step which is not asked, but I have solved here. Let us come to know about that. LTCG, the tax liability for calculating the company is this format. We have to calculate in the same format. STCG, if there is any, will be calculated at the rate of 20%. STCG related item, yes, the problem has STCG, right, but it is not stated that it is related to STT. in the problem ಅವರೇ ಡೈರೆಕ್ಟ್ ಆಗಿ ಕೊಟ್ಟಿರ್ತಾರೆ, STCG belongs to security transaction tax ಅಂತ. ಹಿಯರ್ ಈ ಪ್ರಾಬ್ಲಮಲ್ಲಿ ಎಲ್ಲೂ ಕೂಡ ಥರ ಸ್ಪೆಸಿಫೈ ಮಾಡಿಲ್ಲ. So as the problem is completely silent regarding the security transaction tax, I have not considered here STCG. Next, casual incomes nil, because there is nothing information related to that. Other incomes at 30 percentage. What income is other income? That is nothing but the total income. Take the total income, calculate at 30 percentage, you will get 1,08,900, and on this amount education cess is to be provided at 4 percentage, 4,356. The total of all these will come to rupees 1,13,256. So this is today's class. Also two problems have been solved, which is related to computing the tax liability of normal provision but not the MAT provision. First we will understand this and then we will move to the MAT provision.